Okay, good morning, hola, ¿cómo está? All of the good stuff, bonjour. Let's get into CPI. So we have CPI data coming out later on today, but we also had the FOMC minutes that we need to cover off and also the PPI numbers. And this is basically like inflation for the guys who are like the producers of stuff. But we need to cover off all of this and see exactly how we should be trading the data that comes out. The bottom line is that we're not going to be too excited. Now, let me just jump in and show you couple little bits that we need to look at. So first things first, we're going to start with the minutes from the Fed's meeting in September. So people, typically look at this and they're like, what does this mean for us going forward? So the overview, policymakers reaffirm their strong commitment to returning inflation to the Fed's 2% goal, with many officials stressing the need to stay the course even as labor markets slow. If you guys remember, labor markets are one of the major kind of catalysts that I've been looking at because this is what the Fed have said, look, we want to have low inflation, but we also want a strong labor market. And then they kind of say, they say, okay, forget that. And then they said, okay, well, how about we only focus on the labor market? And so the overview of these minutes was that the consensus was to purposefully move to a restrictive stance in the near term through though several officials saw it as important to calibrate the pace of tightening to minimize harm to the economy. And I think that that is obviously what the general public want, but I don't think that's exactly what's going to happen. I think we're still going to get a 75 basis point hike, which actually brings me over to this. So the calculator, after the minutes came out, it just kind of brought a further sense of that reassurance that we're going to have a 75 basis point hike. So it still isn't looking good for the overall markets. Many officials saw need to maintain restrictive rates for some time. I think, in my mind, that's 2 months. Well, 3 months actually, but decreasing after these that come up in November, which could lead to a bit of a pump. But there's a couple of reasons why we might not see that. And now, overall, Fed officials are worried about the risks of doing too little on inflation. This is just another take coming in from Bloomberg. Inflation obviously is running too hot. Obviously, US price pressures exceed Fed's 2% target. Well, obviously, of course they have. That's all everyone's been talking about. Bloody 6.2. And then looking further along, so essentially the Fed has been slammed by critics for being slow to respond to mounting price pressures. And then the Fed unleashed its most aggressive tightening campaign. And we can kind of see this here. It's extremely steep, given, well, based on what's kind of happened previously, it's extremely steep. So the data that we're looking for is coming out today, for core inflation later on, and also then CPI-linked inflation. Also, we should note that if we see inflation rates in Germany come in at 10%, this is only going to lead to a stronger dollar. And what happens when we have a strong dollar? We have a weak market, whether it's stock market, crypto market. That's basically all. So CPI, guys, what is CPI? CPI is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. Just what do you buy on a daily basis, and is it becoming more expensive? That's the easy way to kind of look at it. One thing I do want to notice, or I do want to explain, is that this sentence here is very important. So, for example, CPI data in 2020 and 2021 was based on data collected from the consumer expenditure surveys of 2017 and 2018. Now, this is not obviously the prices back then. We're not 4 years behind, but this is in fact what are people buying? Now, people's buying habits naturally have changed ever since we've had COVID, and people have been spending more time indoors, etc. So there is a little bit of a skew as to this not being 100% efficient, but it's the best kind of sample base that we have. So I just want, I think that's something that not too many people know. So we're looking at CPI being the major the major part of what everybody's looking at. Now, we don't have CPI on this, and as you know, I've shown you this previously. It's a summary of economic projections. Where do the Fed want to be? They want their Fed funds rate to be at 4%. Currently, we are at 3.25, as you see here. And so this is why everyone is like, well, basically, this is the most common. This is what all of the economists think is going to happen, just because they're going to fall in line with that 4.4%. But we also have now a number of different issues. I'm going to come back to whether I think we're going to, overachieve or kind of underachieve these targets and these forecasts. But even if, right, we get round to November, on the 2nd, we have the most aggressive, this, because from here onwards, there have been 75 basis point hikes before, but this will be the last one, okay, in November. Surely the market should start pumping, right? Now everything's going to be easy. I don't think so. And there's a couple different reasons why I want to bring this up. So looking at PPI has climbed 4% in September, first advance in 3 months, which is not good. Okay, that means prices are still high. So that means they're going to have to pass these charges onto the standard consumer, And people are also worried about the DXY. I'll bring that up in a second. Another kind of reason, which also ties in with the DXY, is that I think we're going to really see some pain in the stock market. So at the moment, we're seeing the earnings season is actually not really doing too well. A lot of companies are missing the earnings. I think that's why we're beginning to see a big, should we say, a big push to the downside. And so, stock markets, they are currently bleeding at the moment. Whenever there's an earnings, we see a lot of people, their prices, their costs internally are just too high, and they're not doing the sales numbers. And so this is why people are worried about the stock market hitting an even lower, even bigger hit because of poor earnings. Now, with this, I think we're seeing it's because of the whole, people are worried about a recession, right? And so as everybody is worried about a recession, they're not going out and spending as much as they could be or maybe should be. And so consequently, if they're not spending very much, companies not going to be earning money. And if companies not earning money, then they're going to come out with their earnings. It'll be less than expected, and the stock will drop, which obviously is not good. But another thing that has only really come into light, and I would say, look, it's going to be predominantly become an issue in the past month or two. Now, when we're looking at these earnings reports, these, because we're in Q3, are earnings reports for Q2. So we're looking at previous data. Now, previous data doesn't take into account the past kind of, should we say, maybe month or two. And that's this real big issue with the US dollar. So the DXY, as we know, has continued to go up. The DXY is just on a tear. It keeps going up, right? Everything else keeps going down. Now, over the past month, let's say if you're in, the UK, you've got 4% disparity. So if you were going to be buying goods from the US, you have to spend 4% more just for your currency to be kind of the same. And then, as I know, there's been variations within this. We've had mad lows to the bottom and then kind of recovered. This is just a general over the past month. You can see every currency is doing worse against the dollar. And so if you are a different currency, let's say the Aussie dollar, you're going to have to be spending 7% more just over this past month to be buying goods. So what would you do? You probably would just invest in your local economy. You just buy from someone who sells in the same currency as you. Even if it's a little bit more expensive, it's probably offset by that whole, the currency issue. So I think we're going to begin to see this currency issue being baked in, lack of international consumers for the US companies. So I think this whole earnings season is probably going to get worse into Q3. So in Q3's earnings, which will be reported in Q4. So I don't think that we're going to be like, hey, everything's okay again, because I just don't see this going under the radar. Now, I know not many people are talking about it, but as we know, we do have the massive correlation between the NASDAQ, the S&P, and Bitcoin. It's just that investor sentiment, Are people investing in stocks? Well, are they investing safe stocks? Not really. So why would they be investing in risky stocks? They probably wouldn't. Well, then why would they be investing in very risky cryptocurrencies. They're not really. And so this is why, we see people like Jamie Dimon from JP Morgan. He is issuing a stark panic warning that could hit the price of Bitcoin, Ethereum, and crypto in general. And so, yeah, so the market braced for data that something will decide its fate. And that is because, we've been trading sideways, which is fairly normal. So we do have this secondary story with a US regulator making a surprise crypto price prediction, but it hasn't really bothered anything. So as traders try to guess what the Federal Reserve will pivot from, I should say, when the Federal Reserve will pivot from its hawkish stance, one of Wall Street's most influential chief execs has warned of growing market panic that could send stock markets another 20% lower, potentially dragging the price of Bitcoin and Ethereum and basically the rest of the crypto market. Things are very, very serious, which I think are likely to push the US and the world. I mean, Europe is already in a recession. I mean, the US is already in a recession as well. Pick that up. But obviously, you're friends with the government, so you don't want to say the US is in a recession, especially if they've gone and changed the definition of a recession. So everyone is talking about this recession coming 6 to 9 months away, which means that there's higher price uncertainty for everything. And I've gone through, like I said, we've got the DXY story, we've got the earnings story, we've got producer prices still going up. We have everybody worried. You've got the bond markets going crazy. And so what we're saying, or what he's saying anyway, is that the next 20% will be more painful than the first because, we can handle a 20% correction. That's, well, it's annoying. But then can we handle a 40% correction? Like, then everyone gets really scared. Like 40%, maybe I should start selling. I'm a diamond hander, but maybe I should sell. And so, yeah, basically the overview of this is that he is reiterating what we've seen here from the likes of Bloomberg, that they have waited too long and did too little as inflation ramped to a 40-year high. So as the general market begins to sell off, what he's saying is that we will begin to see this correlation continue between crypto and the general markets itself. Now, I know I'm only on like a 4-hour. Let's go to a daily. But yeah, we all know the story. I don't really need to rewrite this story. But it's just been a continuous downward pattern. Yes, a little bit of relief here and there, but the bottom line that we're seeing here, guys, is that looking at macroeconomics, it's not looking good. Looking at the war in Ukraine and Russia, really not looking good, which again leads to this whole global crisis because they produce 12% of the world's calories. And so having elements of this, having aluminium potentially as a new sanction be placed upon Russia leads to, again, the whole supply chain issues start becoming, revamped. And so then people can't produce as much or they start selling things for a higher price. So again, the more sanctions we see on Russia, the more we're going to see just things that you want to buy become more expensive, which is then going to have increased costs, etc., for companies, means earnings come down, the stock market falls, crypto falls with it. This is really why, I see a lot of people, especially on Twitter and stuff, Bitcoin does a small little jump, we get above 20K and everyone's like, yeah, go on, let's have a pump, let's all go to 25K. Like, there's such a massive story here that I think is kind of being missed. So anyway, back to the whole CPI data, which I know I deviated from. I've just gone full doom and gloom here, guys. You have no choice. But back to the CPI data, even if we're at 8.1, I don't think we come in at forecast. I don't think that we're going to be like, hey, this is amazing. We're still at 8.1% inflation, and core is rising while CPI is coming down. Yes, it's because the price of petrol and food is coming down because we have loads of crisis. Everyone's worried about fuel, energy, and also food. So CPI is coming down, but core inflation is still going up, even if we hit the forecast. Now, I think we might come in above forecast. And yeah, if we do, we're just going to see a lot more downside. But even if we hit forecast, then we will continue to move down. So I would be beginning my shorts, but I would make them on a slightly longer term. I wouldn't be scalping this as a short, because if we do come in slightly under, yeah, that might give the market a bit of a pump. But the stark reality is core inflation is still running away. Jobs are still crazy. They have a crazy jobs report. We're still getting a 75 basis point hike. So we are still going to see more downside. And the US dollar is continuing to pump like crazy. Looking at the daily, looking at the weekly, everything against the dollar is still going down. So we're not stopping that US dollar trend. So that's my overall opinion. If you have any questions, drop a little comment, and thank you very much for watching. I will see you later on. We're going live. We're going to be, what will we be doing? Well, we'll be going live. So we'll give you the direct analysis at the time as exactly what's happening. But here is how to prepare. Thank you very much, guys. See you later.